This is the best top-down analysis strategy using ICT and SMC concepts. Today I will show you exactly how to use this high probability strategy to typically get a better risk to reward while also keeping it simple. So watch this all the way through. This step-by-step process is the first step, 1 hour time frame, market structure shift. You look for a market structure shift on the 1 hour time frame. As you can see right here, we have a 1 hour market structure shift. The second step is you look for a 1 hour time frame fair value gap. If you see here, after the market structure shift, we look for a fair value gap to form or one that's already formed, and we look for the third step, which is a retracement into the fair value gap. So we look for price to retrace into that gap. Once we retrace into this gap, we drop down to the 5 minute time frame, which is the fourth step. On the 5 minute time frame, we're looking for price to be fractal, make the same move. So we are looking for the fifth step, which is a 5 minute market structure shift. You see here in this circle, we have the 5 minute market structure shift. On the 5 minute market structure shift, that's where you will take your entry, and you will either target liquidity, the 1 hour liquidity pool down here, or you will target a simple 1-to-2 risk to reward ratio. Now let me show you a real life chart example where this played out recently. So remember, you look for a market structure shift first of all on the 1 hour time frame. Do we see a market structure shift on the 1 hour time frame? We do. We see a bearish market structure shift right here on the 1 hour time frame. Remember, the next step is looking for a 1 hour time frame fair value gap. Do we see one? We do. Right here we have a 1 hour fair value gap. We look for price to retrace back up into this gap. So once we drop down to the 5 minute time frame, and on the 5 minute time frame, we are looking for a market structure shift on the 5 minute time frame. So a clear market structure shift would be below this low. So we would have this low marked out. When price breaks below this low right here, that's where we look to take our entry. So we would take our entry here. We set our stop loss above the high that broke that structure, and we could target lower for this liquidity, especially since it's closer, and that's slightly higher than a 1-to-2 risk reward. So this is really simple, but it's really easy and it is very effective. Remember, go back up to it, 1 hour market structure shift, 1 hour fair value gap, retracement into the gap, then you drop down on the 5 minute time frame and you look for the exact same thing, a 5 minute market structure shift, which is your entry. That's your confirmation model that price is going to continue away from that fair value gap, and then you target liquidity or a 1-to-2 risk to reward ratio. Hope you guys enjoyed this video. Make sure to like, comment, and subscribe, and I'll see y'all in the next one.